What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com. I'm joined with my research analyst, Matt Clark, and we are here to record another episode of Ask Adam Anything. So I think that we have a pretty hot topic this week. I got a preview of a couple of questions this week, and we are going to be talking about none other than Coinbase, because you can't be in the investment community, the financial community, and not have an opinion on Coinbase. So we'll get to that, I'm sure, Matt, but I think you've got a couple other maybe more interesting questions, if not more pertinent to the type of trading that I do. So we'll hit those first. So I'll let you take it away, Matt.
Thank you. Thanks so much. Appreciate it. Just want to remind everyone that if you are wanting to submit a question for me to ask Adam, you can do so. You can email us at feedback@moneyandmarkets.com, or you can just put a comment down below on our YouTube channel as well. Either way, we love to see what you want to ask. And there's really nothing off base here, nothing out of the realm, because the first question I have for you, Adam, is actually one that I think is the most pertinent question I will ask you today, and is the most interesting one and the one that requires probably the best answer. And that is your studio mic on today?
Yes, I do have a studio mic. It is on today. Apologies for last week's video. I had the settings wrong. I was taking input through my earbud here, and somebody called me out on it. They said, dude, Adam, invest in a mic. So we do have decent mics here, and it is on today. So thanks for that.
And see, that is the most important question, because I want to make sure that people can hear you. Now, to get into a little bit more serious question, the first one I want to ask you about involves options. And this came in, a reader emailed this to our feedback email. And the question is kind of two parts. So I'll ask you both questions at the same time, and then I'll let you kind of digest and take it away. What option levels do I need to purchase the types of options that you recommend in home run profits? And the follow-up there is do you have a recommendation for how much we should put into each options trade? So the first one is about, what option levels do you need to get into home run profits? And then what's the recommendation for how much should be put into each option trade?
Okay, sure. So I've been running an options trading service since 2012. So going on 12 years. And I basically help novice retail investors trade options. And a lot of our subscribers have never traded options before. They sign up for our service, and I walk them through how to set up an account, how to get approved for options trading, how to make their first options trade, how to close the first options trade. And the type of options trading I do is very simple. Now, options get a bad rap because a lot of people think they're too complicated for the average retail investor. And the way I trade options, that could not be further from the truth. So I've been helping thousands of readers do it over the past decade. And I'm sure that anybody that wants to learn how to trade options can do so. So this question is what level of options approval? So when you have a brokerage account to trade stocks, you can trade options from that same account. But your brokerage firm is going to ask you to fill out a 1 or 2 page form with some basic information, your name, basically if you have experience trading options, your assets, and what type of options trading you're trying to do. And that's really what they're trying to get at is, are you trying to trade a very risky form of options, or are you going to be trading options in a safe way? And there are different types of strategies with options where you're selling options and you're trying to earn a credit, not to get too far into the weeds, but that type of options trading sets you up potentially for unlimited risks. And you basically could lose more money than is physically in your brokerage account, not physically, but is actually in your brokerage account. And that would mean the broker would come after you for money that you didn't even have in the account. And so the brokerage firm is wanting to make sure that if you're trying to trade that type of strategy, that you have a lot of experience, that you have a lot of assets, and you know what you're doing. That's not the type of options trading I recommend doing in my home run profits options trading service. In my service, we simply buy options. So we buy options, and the contracts cost anywhere from $100 per contract to maybe $500 or $600 per contract. So we're not talking about a lot of money up front, and you can never lose more than you invested in that option. You're never going to get a margin call for a huge amount that's more than what you invested or more than what's in your account. So brokerage firms view buying call options or buying put options, which are the only two maneuvers I recommend doing in my service, as a very safe strategy. So specific answer to your question is most brokerage, it's a little bit different at each brokerage firm, but most of them, you won't need higher than level 2 options approval. So you can have level 2 on a cash account, or you can have level 2 on a margin account, which just means that you're borrowing a bit of money. But either way, it's a low. I think most of the levels go up to 5 or 6. and 4 or 5 are where you're kind of selling options and they're a lot more risky. But all you need is level 2 options approval for most brokerage firms. It's a fairly low risk level because buying calls and buying puts is a very safe way to trade options. So that's the answer to the first question. The second part of the question is, how much would you put into each options trade? I can't answer that specifically. I'm not permitted to give individualized investment advice. Every person is different. But the generalized answer is twofold. First of all, put a smaller portion of your total capital, of your total investment account, into an options trade than you would a stock trade. Now, you can get more bang for your buck with options, but at the same time, if something goes against you, you can lose a larger percentage of that initial investment. So maybe it's 1 or 2% of your account balance, or maybe it's 5 or even 10% if you're getting real aggressive. But you don't want to bet 50 or 70 or anything that high as far as your total investment account on 1 or 2 options trades. The second part of that answer is I recommend equally weighting your positions. And what that means is simply putting the same dollar amount into each trade that you make. So let's say over the course of a month, you make 3 options trades. In my options trading service, it's not high pace, it's not day trading. We buy anywhere from 2 to 4 new options positions per month, okay? And we hold those positions for anywhere from 2 to 4 months. So it's kind of like swing trading. So if you're going to buy 4 option positions in a given month, you just need to decide how much you're going to invest into each position and invest the same amount in each position. So let's say it's $500. You want to invest $500 in the first trade, $500 in the second trade, $500 in the third trade, and $500 in the fourth trade. We call that naive position sizing because the idea is you don't know which one of those trades is going to be a loser. Maybe you lose like 50% of your investment in on one of the trades that doesn't go your way. One of the trades may be 100% winner and double your money. And then one of those trades may be a 2 or 3 or 400% winner. And you don't really know ahead of time which one of those 4 trades is going to be something of a dud, which one's going to be an average profit, and which one's going to be like a rocket ship. So if you bet a lot of money on one and a little money on another, you're really introducing a lot of luck to your overall investment, your net returns. So the idea is just to invest the same dollar amount or the same percentage of your account, either way, into each options trade. Give each one an equal shot at being a home run winner, and you'll do just fine that way. I've recommended trading that way for the past 10 years. And like I said, I have subscribers that write to me today that have been with me from day one. And so I'm living proof that I can teach anybody how to trade options a safe way, a simple way, and a very profitable way over the long term. So you need level 2 options. You need to put the same dollar amount into each trade. And that's definitely what I would recommend. Home Run Profits is my service. We'll link to it. Again, it's open for novice traders, and I think it's a lot of fun.
It is. I can speak from experience. It is a lot of fun, and I don't say that as a person who's part of it, but I say that as someone who kind of started investing a little later in life and picked up on Adam's abilities and how he teaches things. It's very, very simple. But yes, we'll try to link to more information on Home Run Profits either above or below. You'll be able to find it with relative ease. Now, the next question I have here, Adam, is one that drove headlines all late last week because it was big news. I think it's going to be continued big news moving forward, and it surrounds the cryptocurrency exchange Coinbase. The question here is very simple, but I think it can branch out into a lot of different parts, and that is: should I buy the Coinbase IPO?
Should you buy the IPO? So I'm going to give a very a cop-out answer. First of all, I'm going to assume that anybody that clicked on this video because we're addressing the Coinbase topic, either A, wants to buy Coinbase and wants me to validate their pre-existing belief that Coinbase is a good buy, or 2, is worried about buying Coinbase, but is more worried about not buying Coinbase because of the fear of missing out. So my recommendation is to buy Coinbase. And more specifically, here's the cop out: buy 1 share of Coinbase. Okay. Don't buy 10 shares. Don't buy 100 shares. Don't buy $10,000 worth. Buy 1 share of Coinbase. I think you're going to be buying that one share at an inflated valuation, and I don't think you're likely to make a lot of money on that one share. But here's what that will do. Anytime you have skin in the game, meaning that you have actual money invested in a stock position, you are absolutely more likely to spend more time and energy following that company, following the industry in which it operates, and you will become a more informed investor in the space than if you did not have a position, real money position in that stock. So do I think that crypto, do I think that blockchain, do I think this whole universe of digital currencies and digital platforms is going to be transformative and be here to stay in the future? Yes, I do. I used to be a skeptic. I used to not fully understand it, but over the past several years, I've really come to understand how it is revolutionizing things, whether it's blockchain technology, whether it's tokens, whether it's cryptocurrencies, and I do believe in it. But here's the problem. Right now, cryptocurrencies have run up like, let's just call it 10x, okay? There's about a 4-year cycle in crypto, and part of that's due to the halving cycle where half the number of Bitcoin are issued every 4 years. And so you kind of see this really dramatic run up, and then you see a steep pullback and kind of a sideways consolidation period for 2 to 3 years. And then 4 years, not to the day, but you see another run up. And my concern is that we're kind of toward the end of this run up phase. Now, could it go another several 100%? Absolutely. So if you want to trade it speculatively, trade it speculatively. But as far as Coinbase is concerned, I'm concerned about the valuation because they're coming out with this IPO. It's not an IPO. I'll tell you about that in a minute, but they're coming out with this listing kind of at the height of this current bull cycle. And that tells me that they're kind of trying to capitalize on everybody talking about Bitcoin, everybody talking about crypto, everybody talking about NFTs. And they're not doing an IPO because they don't want to raise money. So they're not offering any new shares to the market. Typically, a company will come to the market, the public markets, and they'll offer new shares because they want to raise capital and they issue more shares. Well, that's an IPO. This is a direct listing where they now make the current shares that are already existing available to trade on the market. And what that allows insiders to do, people that work for the company or the private market investors, it allows them to sell their shares on the open market to retail traders who don't want to miss out from day one. Rather than there being a lockup period of 6 months, those insiders can sell their stock immediately. They're already doing it. So it's estimated that about 115 million shares of insider shares will be sold in kind of this initial period. And so I think it's kind of, the valuation to me doesn't make sense. The valuation's in the $80 billion range, which is 10 times the valuation that the same company had as a private company just a couple of weeks ago. Everybody's talking about the revenue. One thing, a lot of IPOs IPO and they're not profitable, and that's why they're seen as more risky, but potentially high performing if they do get to profitability. Coinbase is already profitable, but their profitability is based solely on trading activity in the crypto space, whereas 86% of their revenue comes from those revenue trades, so basically a fee on the transactions. And so volume is up over the past 12 to 18 months simply because crypto prices are going through the moon. And so if basically during a bear cycle of, the bear phase of the cycle, like we saw in 2018, that revenue could contract by as much as 80%. Because trading volume contracts by about 80% in those cycles. So, you're probably reading that Coinbase made $1.8 billion in the first quarter of 2021, but, cut that down by 80%. And do you still like the stock at this current valuation? So they're valued at right now like 60 to 70 times sales. And that valuation would be up, fourfold if the revenue fell by 80% in the next down cycle. So to me, there's a difference between a good sector opportunity. So we're talking about crypto and blockchain. I think that's a good opportunity. There's a difference between a good company. Do I think Coinbase is a good company? Yeah, they've been a first mover. So I think they're a fine company, and I think that they will find their way through the market. But there's a difference between a good sector, a good company, and a good stock. For a stock to be a good stock, it has to be a good valuation. And I think that Coinbase's valuation is just not justified right now. So again, my recommendation is to buy one share of Coinbase so that either one, you can pay attention because you've got skin in the game, or two, so that if you really want to be able to tell your grandchildren that you bought Coinbase in its first week, you can say you did that and you don't need to tell them that you bought one share. Another perspective that I'll share with you is just some numbers here on other huge hot IPOs. And so I'm going to give you some numbers. Minus 38% minus 58%, minus 79.9%, minus 93%. So those were the returns from IPO price to the lowest lows of Facebook, down 58%, Alibaba down 38%, Snap down 79, almost 80%, and GoPro. Remember GoPro down 93%. So it's interesting because everybody thinks that their only shot at getting into the IPO is on day one or is in week one. But if you had waited a few months to buy Facebook, you could have gotten Facebook at a 60% discount. If you'd waited to buy Snap, you could have gotten it at an 80% discount. GoPro was actually the opposite. GoPro shot up because everybody wanted to get in, and a lot of people paid probably like double the IPO price. And then right now, the 93% down, that's more recently. So, basically the point is, this won't be your only opportunity to buy Coinbase. Whether Coinbase is revalued at a much more realistic valuation, I would not be surprised to see it down 50% at some time in the next 18 months. So that's going to be a better buying opportunity. So buy one share today, start saving up some money if you get a really deep pullback and down the road, and you can buy a lot more then. If you want a dollar cost average into it, put a certain amount of money into it each month. Or each quarter, that's a way to do it. But right now, I would not be a buyer of more than one share of Coinbase.
It's an interesting perspective. Just one share, that's it. Just buy one share, just so you don't have that FOMO, that fear of missing out. You say, I was part of it. One quick thing before we go here, and that is, there is talk, and it's not big talk, but it's not widespread, but there is the possibility that Coinbase could be an M&A target. They could be rolled up into a larger bank and a larger investment service, a JP Morgan, a Charles Schwab, you name it. Does that make Coinbase any more or less attractive as an investor?
Not at this evaluation, because I would be shocked and appalled if any of the current money managers or brokerage firms or capital markets companies were to pay anywhere near this valuation for Coinbase. You will see people swoop in and consider talking about those deals if Coinbase is valued at 20% of what it currently is right now, which are some estimates as to what it actually should be valued at. More like a 18 to $20 billion company, not an $80 billion company. So that's when you'll see actually M&A happen. Nobody is going to be paying this current valuation. So is it something to watch for down the road? Yeah, absolutely. But is that a reason to buy Coinbase today because you think it's going to get swallowed up by one of the brokerage firms? It won't at this price.
And then one other thing that popped into my mind, and I'm not really sure if we want to get into this, but you see companies like Tesla that have these huge short positions. Is Coinbase one of those potential Teslas where big money firms could possibly short this company? Just sure. because it's come out so strong and with such a huge valuation that the only way it could go, the only direction it could go is down?
Sure. Shorting isn't necessarily my expertise, or it's a very nuanced game, but absolutely. Anytime you get a kind of a story stock or a cult stock, call it, that has very questionable valuations, of course, it's a target for a short. So you don't have to make the stock doesn't have to go to zero to make a lot of money on a short. But that said, it's also it's a risky trade because, you don't know how long the mania is going to last. So I do think I haven't read necessarily on any high profile short sellers that are targeting Coinbase. I wouldn't be surprised if some of them come out and start to pitch their thesis for a short in the next 6 to 12 months. Or opportunistically. These things go down fast. So if we start to see a breakdown of key levels in Bitcoin and Ethereum and a lot of the altcoins and Coinbase, you could see people pile in. So certainly something to watch out for. I'm not necessarily saying for the retail trader that you're going to make more money on a Coinbase short than you would a long, but certainly there's some asymmetries there that make you want to look at it.
If cryptocurrency becomes more widely accepted as a payment option, meaning that right now you can buy things with Bitcoin or with Ethereum or anything like that, but it's a very small basket of things that you can actually purchase. If it becomes more widely accepted, if it's a situation where you can go to a clothing store and your purchase can be paid for by Bitcoin or Ethereum or something like that, if cryptocurrency becomes more widely accepted, blockchain becomes more widely accepted in the financial world, is that good for Coinbase or is that bad for Coinbase?
There's a bull and a bear case for it. I think that generally it's bad for Coinbase because as it becomes more mainstream, other players are going to get into it, and a lot of the frontier market, profits that you can make by being a first mover in a very fragmented space are going to go away for Coinbase. That said, you asked a lot of different questions there, and there's a lot of different distinctions there. I mean, I think the blockchain is already becoming mainstream, so that's one thing. Is Bitcoin becoming mainstream as a medium of exchange? Not really. And as far as a store of value, it's way too volatile. But then you also have these stable coins, which are executed on the blockchain, but are more stable in price. And those, I think, there's a stronger case that those could be viewed as a store of value and perhaps a medium of exchange as well. So kind of bypassing the very clunky, outdated technology of the 1970s that runs the entire financial system. Is that going to get a major upgrade by blockchain and by stable coins? And I think absolutely, it's just a matter of time. It's a matter of when, not if. But that doesn't necessarily mean that, Bitcoin is going to be the most ubiquitous currency or that it's going to supplant the US dollar as a reserve currency or anything like that. So there's a number of things at play here. That's why I think that if you want to dive into the space, you really need to educate yourself on all the nuances of it and the different ways to play the space, and not just necessarily go for the easiest low-hanging fruit being buying the Coinbase IPO. So we did a podcast with Charles, and we talked about right now it's still hard to access some of the crypto space, but that's probably a good thing for returns because the fewer people, the harder it is to access a space, the more kind of fruitful opportunities there are for people who actually get in and do it. If you can buy Coinbase from any brokerage account, that almost to me kind of marks the top of the interest in it, at least for this current cycle, because if everybody can pile in and do it, especially price insensitive buyers can just hop in and do it, then that to me is concern. So, I mean, if you just look at the kind of colloquial signs of a bubble, my wife's asking me about Dogecoin, and my dad is asking me about NFTs, and he's not a sophisticated investor. And so you're getting all these people, collectibles. I mean, you still look at like Sotheby's and the big auction houses as signs of bubbles in other markets. So, whether the Chinese market, all the Chinese were becoming very fluent. They were paying some crazy prices for art at Sotheby's auctions, a decade or two ago. And, you're seeing collectibles currently. I mean, the price of all kinds of collectibles are going through the roof now. And I guess you could call NFTs a form of collectibles in a new format. And I have to wonder if, most of that is being bought by, new crypto millionaires that have certainly enjoyed a run over the past couple of years, or, maybe they got in early, but whether that lasts and whether it's a good time to enter the space now, if you haven't entered the space, I would just caution newbies from getting in at these current prices.
I think that's all the questions we have for this week, Adam. I think you've done a great job talking about a wide range here, as usual. The mic is on. That was good. Covered options, and again, we'll have a link for Adam's home run profits service. You can find out more information about that, and of course, be remiss if we did not talk about Coinbase and its IPO that priced out, or its direct listing rather, that priced last week. It's going to be continued to be talked about. I think you're still going to see it anytime. Any upcoming IPOs that are talked about are always going to have that reference back to Coinbase because it was so big and such a huge driver. So, Adam, that's all I got for you.
And I'll offer the caveat: I am no expert in crypto, so this is just kind of my layman's opinion. I'm certainly educating myself on the market, but and I know I'll get hate mail in the comments probably. I know that anybody that speaks not so highly of crypto or Coinbase is probably going to get that common "have fun being poor" comment in the comments. So ready for that. But what I am an expert on is trading options. So again, home run profits is a simple way to trade safely options, and we'd love to have you. And like I said, we've helped thousands of readers trade options over the last decade or so, and it's pretty simple and fun to do. And so I am an expert on that. So I hope to see you there. And thanks for another episode, Matt. Have a good one.
Thank you. You too.